Euro USD daily time frame, and price has breakout this bearish parallel channel, and multiple daily candle closing outside this channel confirm a clear breakout. After breaking this, price is now retesting this resistance as a support and previous high at the same time. So if in FOMC meeting Fed gave signal for 50 basis point rate hike in December, then it can make a new high, and next target will be our next static resistance level 3488. This is our first nearest resistance level, and if this really happen after FOMC, it make new high and goes up, then you will get a chance in the middle, and you can join when price make a correction between these two support and resistance level. Or this can be a fake breakout, because there is a still possibility that this is election trap and Fed change his mind like they did in Jackson Hole meeting and start hiking aggressively once again. So we have two possibility. First, it break again downside to this horizontal resistance and make a new low, because this can be a VC zigzag pattern, and wave C was 100% projection of wave A. Or maybe it goes up first, retest this horizontal resistance level, then make a new low. So bulls will buy in the middle when it will make correction targeting upper resistance, or seller will say retest of resistance, or after breakout of current resistance we will sell retest. But technically price has breakout this parallel channel, and we need one more higher low higher high to confirm that trend has been reversed. But as a beginner intraday trader, you focus on these two horizontal support and resistance level. And if we see USDJPY daily time frame, then once again it retested this 145 horizontal support, and after retest it is going up, and it can make a new high, because Central Bank of Japan is doing thing which make their currency weaker. They are debasing their currency and printing unlimited amount of money, so it can weak more against dollar, because central bank behind US dollar are doing QT, while central bank behind JPY are doing QE. So dollar is strong, JPY is weak, so there is a chance that it will go much higher. Possible that it may go up to 200 level, and technically it is making higher high higher low. So trend technically is bullish and fundamental are also bullish, and our first support was 145. After breakout it is testing and ready to make new high. And if we go to H4 time frame, then price is perfectly holding this 145 level. So if you have buying entry which was retest of resistance after breakout, then your target is 152 level, the targeting new higher high. Or if this level breaks, after FOMC and Fed gave signal for rate pause next year, then it can break 145 level. Then we will see a retest and targeting 138 level, and your main focus is 145 level, buying above the support and selling on breakout of the support and targeting 138 level. And if we see GPUSD H4 time frame, it has broken this trend line and it has make new high. So until price break below this level and this yellow trend line, it can be short term bullish and you can buy retracement or sideways correction. Or if Fed change his monetary policy tone in FOMC meeting from QT to QE by saying 50 basis point rate hike in December, then this can change trend in this pair like EURUSD gold and GBPUSD. And if we see daily time frame of dollar index, then price is still making higher high higher low inside this chart pattern. So as long as price is trading above this white trend line, dollar is bullish and you can say it a correction, because few retracement for this last AVC wave has made 50% retracement from 109 level. It goes up in intraday. If new low comes, the next target will be 61% retracement level at 108 level, which is 61% retracement of this last corrective ABC wave, because there is still possibility that it retests this lower trend line and after midterm election it keep going up and make a new high. Or if new high does not come, it make a sideways range below 113 level, then people will say that dollar has made top and they will trade like that, and it can make a sideways correction before making new high. But below 113 level, dollar is bearish, and for a bullish confirmation we need to break out above 113 level, then we can say dollar is bullish. But for that, in FOMC, Fed has to say they will hike 75 basis point once again in December. So if it break 113 level, dollar is bullish, or if it break below this white trend line, then dollar is bearish. And these two are your key support and resistance level, which will give you clear confirmation that dollar trend has changed or not, because next trend of dollar will decide after FOMC meeting this week.